following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had a pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Hi, guys. Welcome to the Tom O'Brien Show. I'm John Logan. Tom's getting ready for a pretty big event right now, so he asked me to come on board and say a few things while he's out. Tommy's up there, too. And we're going to talk a lot today about the scanner that I've got on the TFNN website on the homepage and that carousel today a little bit, too. A lot of upgrades on that thing recently. I want you guys to get a trial of it if you haven't gotten it yet. And if you got it in the past, it's a starkly different product these days. A lot of value, cuts to the bone very quickly. And there's also a 1.5 hour, it's actually over a 1.5 hour free market profile course on as you drill down into the information and are able to view that. You can also get a trial to the scanner itself. There's just, in addition to the course, I think there's a total of about 15 videos up there, but 6 or 7 of those videos exclusively deal with the matrix section of the scanner, which we're going to talk about today, which is basically, drilling down pretty quickly using some metrics to find some opportunities and understand where those opportunities lie within the broad index. So very, very cool piece now. And you need to watch the video. There's about an hour's worth of videos alone just on the matrix. So talks about how to ring the register with the matrix. So here we go. Let's talk about the S&Ps first. We're going to keep the phone lines open too. If you guys have any questions along the way, feel free to call in 877-927-6648 or internationally 727-445-1044. All right. So we're going to take a look at the S&Ps first just to kind of get going here. It's not a lot of change in the trend. We all know that. But here's the long-term weekly. I'm showing them on my chart right now, and I'm sure Al is showing these. The profiles is what we base a lot of the software that I write on, and these profiles are balanced areas or fair auctions. If you guys have watched me before on this network, you know what I'm talking about, but I'm showing them on the chart right now, and the good news is you can always understand where a stock lies within a balanced area or outside a balanced area using this simple indicator. The scanner's built on it, the edge, and a trade map, a couple other things that we put out. But these inflection points on the outside of these balanced areas are incredibly good areas to pick battles in general. So what do they do for me, and I hope it'll do the same for you, is cause you to be patient and wait until some signs appear that kind of make this a little bit more black and white. So as you'll notice, for example, on the S&Ps in an uptrend, and we're looking at the weekly chart here, recently, the past month and a half, we actually, had a new balanced area appear. These happen automatically in an algorithm. We traversed the whole fair auction to the other side of the balanced area, that inflection point I talked about. Considering that we're in an uptrend, profiles still have been edging up over time since, God, I don't want to, let's see where, just to kind of put it in perspective, January 2016, we started a profile and have edged higher on profiles continuously until now. So what does that mean? That means we're in an uptrend, and every time you back and fill with a new profile, that is generally speaking a decent area to pick a battle on the long side. We look at a lot of different things to try to gauge whether we're supposed to be long or short. And today there were some reasons to look at the market on the highs from both sides of the equation, but let's just look at the long-term view and understand we've broken out past 2 weeks. We come back and retested for the most part, and that's a pretty powerful setup. And it's kind of okay to be long and not okay to be short unless you're doing some ultra shorter term trading. Here's our daily. And again, we kind of busted through 2507.25, and there's just nothing up here. In fact, I'm going to show a product really quick. If I can pull it up here. Actually, we can do it in the scanner. Let me just show that. So if we go into the scanner and look at the landscape view of the S&Ps, I'm going to go right down to the ES here. I want to, basically show you that we've got green across the board. And what does that mean in every cell, weekly, daily, 240 and 60? That means that prices above profiles across all 4 of the major time frames that we look at, and more importantly, the weekly and daily. So let's just get out of this really quick. I want to pull up an S&P chart. Okay, here's a breadth chart, or excuse me, a landscape chart. This is the level of the market up here. And as you'll notice, here's the 4 profiles, and we're just up here in the ether, so to speak. So, we could drift a lot higher. There's obviously a lot of, don't try to be a hero and just put on a big short position unless it's hedged. Anything can happen. This might be the kind of the sell the news topic of all times, actually. When they actually do lock in the final maybe tax adjustment plan, because then everything's already factored in, and then where do we go from here? But a lot of these folks in the marketplace have factored a lot of this in, no doubt. But right now, you want to have something to kind of lean on to short this, or you want to, if you're going to be thinking in that capacity, you want to at least have a hedge on. So you could short futures, buy in the money calls, or you could just wait until some things look a little bit more attractive. A lot of the things in the scanner you can use exclusively to trade underlying instruments or futures. But one of the things that I look at is when these 2 speed dials up here in the upper right corner, these weekly and daily are in the same direction, in this case positive, you've got really good opportunities to trade things from the long side. And if they're both pointing in the negative direction, then you've kind of got some confluence on breadth calculations that we do that it might be okay to start shorting stocks, but that's not the case right now. Apple, you see how much time we have before we got to go to break here. Getting close. We're going to get into Apple when we get back, and everybody's looking at this stock. It's probably in everybody's portfolio. So we're going to talk a little bit about this when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the Tom O'Brien Show. I'm John Logan, filling in today. And we're going to jump right into Apple. We promised that earlier. I want to pull it up in a real-time environment here. And we're going to access Apple. Market's still open, of course. So I actually did a little video on this morning. You know, Apple, this is having a weekly close above 152.59 is a big deal. Why? Because if you look back at Apple, and again, you know, you look at a lot of these stocks, I talked about these profiles being fully explored most of the time once they appear. You know, Apple had a big fat profile appear when it was trading about 163.18, and that means, you know, chances are we're probably going to do some backing and filling at bare minimum. Last week we actually, and we're looking at a long-term weekly right now, just to kind of get a start on this, and then we're going to drill down a little bit to the right. But we had a weekly close outside the profile, which was kind of wild. That was a battle point. Yes, John Logan actually tried to buy Apple there, 152.59. And you got to, again, you use your judgment on your stops. But having this thing reverse back into the balanced area, that's pretty powerful, actually. And it's absolutely not hurting that the market's making new highs, and we've got impending euphoria on the horizon with taxes and goosing the economy. The bonds are, you know, and the notes are, not looking good. But Apple, you know, is obviously in the last couple of weeks is not trading with the market, but getting back in the balanced area is a big deal. There's some sector rotation obviously going on right now. I'm not so sure this is going to be the best. I was looking at it from a trade and bounce kind of standpoint, but I'm not so sure this is a stock that's good. You know, we've got some tax benefits that some money might be coming from offshore. I'm not so sure all that's going to happen so quickly. And I think Apple is not, even though we're getting back in the balance area, is probably not the best thing to put serious weight on right now. Again, you know, you've got some trading opportunities with some of your part of your portfolio. This might be one of them, but I think, you know, the investment grade part of it might have the air taken out of it for a little while. So that's my take on Apple. Let's see. Let's take a look at the scanner, actually. Again, using the same profiles to kind of gauge things. I want to show you guys, talk about a couple of things in here that are new. This is a top 10 list. It's ranked and based on a quality score that we've developed in here, and that's a function of risk reward multiplied times the relative performance of the stock versus the market. So, the theory here is trying to buy strong stocks that are at inflection points like we talked about before relative to profiles, and selling weak stocks. I've done with the course and the videos that are on TFNN's site right now, there's probably about there's about 3 hours worth of videos up there to get a trial of this, being the course and some how-tos and what all these things mean on here, definitions, but more importantly, about an hour's worth on how to actually make money with this product. So we've got entry, stop, target based all around profiles. You can develop your risk reward at that with those three metrics. But the relative performance change is something I always like to know, like, what's the stock been doing relative to the market lately, and how do we factor that into our thinking in whether an opportunity is valid or not, or is that the best opportunity? So this top 10 list factors in a lot of that and gives you the top 5 longs and top 5 shorts. And those longs and shorts are based on 6 pieces of criteria. And we've actually done a lot of work on this recently. So these sorts have been whittled down. It also identifies whether it's a weekly trade or a daily trade now. So for instance, if I wanted to find some opportunities that are based on weeklies, and I'm more of a longer term investor, or looking for maybe some option setups that I can let unwind over the next 3 or 4 weeks, I can block out my daily opportunities. And let's just say I don't want to see breakouts or breakdowns. All right. So here we have support trades and resistance trades that are left. I can also whittle these down even farther by trying to hone in on high risk reward setups by moving some of these meters around here. But what I'm going to do is I'm going to take those particular weekly trades and I'm going to rank them by quality score. So obviously my worst quality scores are going to be at the bottom here now. And I'm going to look at LUV. So what I'm showing right now, and I'm going to get rid of this up top so we can have a little more real estate to talk about this. LUV is a stock. This is a weekly chart, and when I click on the opportunity, it's going to pull up that time frame chart very quickly. But let's just stay on LUV for a second. So the RPC, or the relative performance of the stock versus the market, is actually negative. So what does that mean? That means it's got by a factor of negative 1.8 versus the market is what this stock is doing. Okay, so it's got a negative factor. As you can see, LUV's kind of gotten jacked up the last couple of weeks, but all it's done, if you go back to what we originally talked about, is complete the cycle up to the top of the profile from being in a downtrend. Okay, so that allows me to say, okay, RPC's negative, quality score's negative. It's a short, that's great, which kind of goes in line with that thinking. And it puts it on the board and gives me an entry, a stop, and a target. So these are, and you can search the whole market looking for these types of things, but all the metrics that you can use to identify that particular trade are in front of you, and it will take a pretty good while to actually do that on your own, surfing through every chart if you even had the profiles on your charts. So this is a very ripe opportunity. Crude, as we know, Southwest is, there's some fundamentals we can talk about. They're usually good at putting great hedges on for crude, which is a precursor to the jet fuel and all that. But all LUV has done has rallied back up into the top of the profile. And remember, today's Friday, we're going to get a weekly close. And this particular little gem, if you're thinking the train's left and, God, I'm going to buy the high print if I start buying stocks right now. If the market does turn around and can turn around, you want to be in stocks that are just kind of lifted their head up to get whacked again. So you want to increase the probabilities always when you're trying to put on shorts or longs. And a lot of times you can increase those probabilities by drilling into either weaker instruments or stronger instruments within the index itself. So, and again, if you guys have any questions, please call in, because this product, I think, this part of this product has really come around. We've always got the original dashboard, and you can do a lot of manual sorts in here to find opportunities, but this matrix area has really gotten some legs, and I want you to get a trial of it. So let's just put everything back on the board. I'm going to not block out anything, and we're going to talk about some more sorts when we come back, folks.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I'm John Logan, filling in for Tom O'Brien today. Tom's getting ready to put on a pretty big event there. So, what do you guys think? Crude oil's going up or down from here? What's the consensus on that? Anybody wants to call in about that? Give me a call, because I've got some thoughts on this. I actually think that I'm showing a weekly on crude on the November contract right now. You know, we use this really wide weekly profile gauge some things, and it's great to just sit tight and wait for these inflection points to be hit. But as you can see, we kind of spun around this last 2 weeks up here on these highs at 50.66 and just blew through. Now, a lot of times these breakouts, profiles, even breakdowns, they'll come back and get retested. But this is kind of interesting on the daily. We had a profile up here below price action trying to figure out what to do with this weekly trade even further. And we've kind of shelved off up here on top. We kind of magnetically come down to it 51.30, and this is actually bullish, technically speaking, from my information. And considering that that weekly profile we just kind of launched out of it, and we've got this daily nice little scenario here. You've also got to look at at least take a look at what the XLE is doing. I can't look at the financials. They're just loving this bond note situation. We're going to look at that in a little bit. But also, it's really eerily similar. And here's the breakout on the weekly on the XLE. If you can see that, and we actually leveraged pretty hard off of that one, 62.33 before. But both of these crude oils and XLEs have had a sea change event on the technicals, on the relative profiles on the weekly. But what I want to look at some oil stocks based on what we just said. But again, here's the daily profile appearing below price action here on the daily on the XLE. I don't think this thing's over at all, actually. And again, we may kind of spin around here before we hit higher. But I think the good news is for both of these types of trades, the XLE and the November crude right now, you got a pretty good place to place stops below like 50.50, that general range. I know that's another point down, and some people don't want to suffer through that large of a pullback. But if you're playing this for a larger, even larger move up, you could put some options slapped on that thing and kind of wait it out. And I want to reference the scanner again. I'm back in the dashboard here, and I actually went to the ETF section and just pulled up the energy sector, and voila, here we are. So I wanted to look at some things that I was trying to figure out what was happening this past week. I mean, here, RRC, we got a little bit of a breakout here, and this is the weekly, and I can go into any one of these cells here and just click on the sell time frame and get that particular chart up. And these are new charts, and you've got a chance to do some Fibonacci stuff and what have you. But you can actually put pointers on here and everything now. But a weekly close above here, even for RRC, and I want to go back in time and look at how long it's been since this little cat, oh my goodness. It's the first time we've broken above profiles in a long time on this. I mean, this isn't the strong of the sector by any means, but a lot of these stocks, let's look at Marathon. Marathon's got, Marathon could really use like a 1285 as support here. So, there's some decent little things going on here. And again, I'm looking at the numbers. These are first time breakouts on weeklies. Hess Corp, a very similar situation right here. But if I wanted to look at some ones that had really already been, the cat's out of the barn, what the scanner is going to do for you is show you, and again, this is a weekly, again, this is a relatively strong stock versus oil and the XLE. And, that this was breaking out literally 4 or 5 weeks ago. And what was that, 107? We've had about a 10-point move in CVX, Chevron, since it broke out last time. We had a little dipsy-do about 5 or 6 weeks ago into the profile. But again, the scanner would have kind of put you in some of these things ahead of time, even when oil was still headed south. So the first timers are there, as labeled as 1, but let's just pull up another one, VLO. And if this was, this is a stock, I don't have this in the matrix, so we're not doing RPC calculations, relative percent of the market or anything. But as you can see, to take this and, okay, we're backed up pretty far on VLO. But, this has been a relatively strong stock versus the whole sector. And, when the sector moves, this is the premise or example of the premise of relatively strong stocks trying to buy them and trying to sell relatively weak stocks. Some of the biggest portfolio managers in the world, believe it or not, that's what they do. They don't try to pick up too many things on sale, especially when the market's telling them that nobody wants it. So this is a stock that was telling you that people wanted it, even in the face of crude and some other things, and the XLE getting hammered. So not a bad way to look at the markets, and the scanner's going to find you those things pretty quickly. I really cannot see. Let me look at CXO. Now this is one CXO. We've had a good run. It's going to have some headwinds here to try to get through that unfair high on the weekly right there. It's really wide profile. 134 got there today and backed off. So this one I wouldn't be looking at from the long side at all based on that alone. COG, strong of the strong. All right, wanted to point some of those things out in the scanner there. A couple of the things that I was looking at earlier. Let's take a look at the, everybody knows this symbol, NDAQ, the NASDAQ. Breaking out again. It's got to be loving life there. Weekly long breakout. Let's also take a look at, I think this is Expedia. Here we go. Now this is one, we've got a really high RPC. It's 1.67. It's been outperforming the market. This is a weekly chart, generally speaking. But as you can see, these inflection points, really, really cool to base trades off of. And we're up at one right now. It's kind of, even though it is labeled as a short opportunity, the RPC is positive, and it's pretty much making highs with the market breaking out. So even though we've got an inflection point there, this would be kind of be shorters beware, based on understanding a lot of the videos that I did for this and why that might not be the best thing. The quality score is positive too. So, quality score is, if quality score is positive and you've got a reversal trade. So let's find those when we come back. Let's look at only reversal trades.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi guys, I'm John Logan filling in for Tom O'Brien today, and he's going to be giving a huge event tomorrow. Wow. So looking forward to seeing how that works out. Really, really good information he's going to be giving. I hope you guys can attend. All right, so we were talking about looking for some reversals here. So one of the things that's a little bit more riskier but has a lot more reward to it is if you can find a stock that's been in a trend a certain way and then is kind of showing the green shoots of turning. And we've got something on here called downtrend reversals and uptrend reversals on the scanner. So those find stocks that are just technically breaking the current nightmare that they're in if they're in a downtrend, and maybe showing some cracks in the armor if they've been in an uptrend. So I'm just going to block out everything else here really quick. And wow, we don't have any downtrend reversals right now. This is amazing. So we've got, let's take a look at this one. So Intel, this is kind of wild here. It's a daily short, or it's a daily short, but it's also a daily short. So stock that's been in a decent uptrend on an intermediate time frame, it's got a relative percent change of 0.67. So been doing quite well lately versus the market, but it's really broken down. This actually started breaking down yesterday. It was on our, and we keep the reversals in force for 2 bars. Just because these are such impacting events sometimes that you really need to keep it on your radar screen. So what I had done yesterday was I checked this box here to save it. And I'm going to show you ACN 2 here. Yeah, so big bar kind of reversal today. This is pretty damning for this one on a daily basis, ACN. So I'm going to take those both and just save them, check them off. And then when I go back to my trade section, they're going to be there. And it's basically taking just a snapshot so you can keep everything on the table without having to write anything down, of entry, stop, target, all the metrics that are there. I'm going to uncheck them just for simplicity's sake right now. But it allows you to save the ones that you like that are coming in to the scanner to look at later. So here's one that just came in called Checkpoint. It's a breakout long on daily. So if I like it, I'm just going to click on it, and then it's going to be in my save section over there. I want to get rid of it. I can get rid of it, and everybody's happy. All right. Silver target. Somebody's asking me about silver, so I'm going to hit that really quick and get away from the scanner. Okay. So the continuous on silver, and we want to use continuous to analyze a little bit. This is our weekly on silver, 16.534 is the bottom of the profile on the weekly. And we got pretty close to that already today even. Gold's kind of trying to use a pretty wide profile POC that we don't talk about a lot right now as support. But silver, 16.534 is your target on the downside. And if you're going to try to, I mean, think how much you would have saved yourself getting back in the profile 17.412 all the way down in this, not doing anything really until we either broke out again or backed into 16.534. That's pretty decent savings when trying to trade that particular metal. And here's the weekly on gold. So it's a pretty wide profile, so we've got to pay attention to that blue line there. 1279, kind of similar to that support on silver there. But if that fails, you got to kind of retool around 1255 on gold. So that's the two situations there on gold and silver. I don't think it's the end of the world to try to buy some gold at 1279. It's been kind of a tight stop. We've already bounced. In fact, we hit a low. Let me get my data window up here. We hit a low actually today of 1280. 1279 support, and we bounced up about 5 points since that low. Oh, yesterday we hit 1280. Okay, so we got within $1 and bounced up. But, you want to see things get away from those inflection points. So we had a little bit of a, what was that? Let me see how much we bounced. Bounced about $13 an ounce, actually. Today's highs, but you want to see things get away from those inflection points if they're going to be powerful, and all we did was kind of go up and retouch where we broke down on the daily before. So, I mean, gold, you got to put your stops in on that 1279 long trade. If that doesn't hold, you're probably going to see 1255. Let's take a look at my favorite stock to keep me on the edge of my seat, Tesla. And I want you to, again, these are weekly profiles in this that I'm showing. And you can see how powerful they are, the inflection points, and just be patient and try to pick the battles around those, and you'll be a lot better off. These lows around 311, how nice was that to kind of avoid some of this 70-point pullback, but reached the highs again and have backed off. So it's kind of this is the weekly and this is the daily. It's kind of a no trade right now in Tesla. There's really no leverage here. And I think we've got a caller out of Dallas, Texas. Are you there?
Yep. How are you?
Doing all right. How about you?
I'm all right. Listen to you all the time. Man, you're on to 7 o'clock in the morning. Kind of missed you.
Thanks, man. I appreciate that.
I kind of missed you. I got up every morning just to listen to you.
Oh, great. It was a little early, but thank you.
Well, could you look at a couple stocks for me and tell me what your scanner tells you?
Sure. Yeah. What do you got? No problem.
Well, I wanted to look at AMD and I wanted to look at PCRX.
Is that Alpha Nancy Paul?
Yeah, AM.
AMP. Okay.
No, AMD. You were looking at Intel. I want to see AMD is
AMD.
Yeah, well, you were looking at Intel a minute ago.
Okay. Yeah, I'm going to look at it on the chart on the e-signal if that's okay with you, just because. Yeah. I mean, it's a little troublesome. We've got a huge profile here on the weekly here, and obviously, some of the tech sector. I know you know this already. The tech sector's had a little bit of a pullback with some of the Apples of the world, and even Amazon pulled back a little bit, which blew my mind. That's not really, I guess, in the tech sector totally, but some of its bodies in the tech sector, I guess. But AMD, let's actually pull up in the scanner. Let's just go right to the XLK, and let me go back there for a second. Okay, let me pull it up again. And AMD should. AMD's not in this sector. Let's look at a couple of other tech stocks here. Can you hang on?
Yeah, I sure can.
Okay, we'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, guys. We've got about 5 minutes left. And is it Keener?
Yep.
Okay. Hey, yeah, I've got AMD up right now. Thanks for waiting, by the way. Got AMD up. I mean, it really needs to break out a 1376. I mean, it's kind of mishmashing around here. You could, if the tech sectors, if they start some massive rotation and start looking at, different things in the marketplace other than the tech sector, this thing could probably see 1034. I just don't have a real good bearing on it right now. I mean, I think you could, I just think you could be in some, it's probably not a lot of risk as a long-term deal, but I don't see it as a super quick trading opportunity. I don't see a ton of risk of it in an investment grade type thing though, but I definitely put stops below 1034 if you were looking at it like that.
Well, I was just thinking about it for the beginning of the month, and I was just going to wait and see what happened on and on Monday, and when you were on, I thought, well, why don't we look at the scanner?
Well, actually, I could pull it up in the scanner. It wasn't in the XLK. That's what I was looking for. I was like, I'll just look at it in the scanner. But Intel and a couple of other chip companies I was looking around at, they look a lot more attractive than AMD. And a lot of times those don't have to be arbitraged back together with the leaders. Some of these are being left behind for a reason. And, I just think it might be a better compressed time frame to be in something else if you were looking for a quicker pop. So,
well,
wow.
I was going to make a decision on Monday afternoon after the first of the month.
Okay. Well, I hear the music, Keener. I
Thank you for
appreciate
taking the call. Appreciate it, and I sure wish you'd show back up in the morning.
Well, tell Tom to let me back.
All right.
All right. Well, guys, thanks for joining us, and stay tuned for the rest of the Tom O'Brien Show. We got another hour left.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.